I'm Grace Pedota with the Canadian Securities Exchange, and I'm here today at VRIC with Frank Curzio. Frank, how are you today?
I'm doing great. Thanks so much for having me.
Okay, and can you tell us a little bit more about the tokenization of your recent article of Andy Warhol's painting?
Yeah, it's very interesting with Andy Warhol because he just tokenized one of his paintings. What tokenization is another way to finance a company. It's another way to finance illiquid assets like real estate, which has $200 trillion worth of assets. So if you have commercial real estate, a lot of that stuff is locked up, so you could sell a portion of it, 10, 20%, tokenize it for individual investors, and that token will trade on exchanges. Now you were talking about Andy Warhol because you say, well, that sounds a little futuristic. It's happening right now. So late Andy Warhol came out with one of his latest paintings where he sold it through auction for $5 million. And in the first time ever for artwork, he tokenized 30%, about 31.5% of the painting, which means that individual investors can own a piece of that painting. Not that you could take it home, but you own an equity stake in that, which is a good painting, right? It's late Andy Warhol, maybe 10 years from now it'll be worth money, but that 20% is going to trade like a stock, as if they sold a percentage of their float on New York Stock Exchange or the NASDAQ. And now individual investors could own this asset. Now it's good for individual investors because they get to own Andy Warhol. It's good because there's all kinds of crypto exchanges coming out. We're not talking about past crypto exchanges where you're not getting an equity stake in utility tokens. These are security tokens, digital securities, where you're getting an actual equity stake. And then for Andy Warhol, whoever's selling the painting on his family's behalf, they could sell off a piece of that asset instead of one person buying the whole thing for over $5 million.
So it's almost like a royalty.
It's similar to a royalty, but here's where when you look at digital tokens and tokenization makes sense. So royalty companies, if they're going to take a percentage of an asset, right? Because basically royalty companies are finance companies. And they'll have all kinds of clauses if they want to buy Newmont Mining's biggest asset and Newmont wants to sell 20% and de-risk it. So you'll have a royalty company come in and they'll make up all kinds of, the whole contract. And I'm an analyst, financial analyst. I've been through these contracts over 20 years. And if you don't produce or at a certain time, then they get to buy the royalties. Could be more later on. With tokenization, Newmont no longer has to go to royalty companies. They can go directly to you, directly to me, directly to the market, directly to accredited investors and sell off 20% of their asset. And people like you and I can buy it, and it's going to trade as an equity on a token exchange.
Great. And how do you see this working out in the junior mining space? How can junior mining companies leverage this same model?
Well, let's do it on a bigger scale. So people don't want to own GE right now because there's an insurance business, there's a power business. But you know what? GE has a lot of great assets. I'd like to own their aviation business. I like to own their healthcare business. So they have assets inside their company. So when you're buying a junior miner, a lot of times they have their signature project, and then they have 20 or 30 projects. And unfortunately, you have to buy the good with the bad. Now you can tokenize individual assets, your best assets inside the company, which sometimes are valued a lot more than what they're trading on publicly traded, like we call it, not to get technical, but sum of parts valuation. Because if you break up the company based on the sum of parts, this is how much it would be worth. So instead of going the whole sum of parts and buying the whole company, you could tokenize each individual asset and own GE Healthcare. If they wanted to spin out, it would be a spin out, but they do it through tokenization. Why would they do that instead of spinning it out? The costs are much, much cheaper. You're going to be trading on these exchanges, tons of them, more than a dozen. T0's launching next week that are going to be trading. You don't have to report quarterly financials, why do you have to report quarterly financials? That's for lawyers, that's for accountants. Who cares what a business is doing in 3 months? You want to be a long-term investor for years. So the costs are good. It's good for investors because you don't have to be a big shot with $20 million at Goldman Sachs in order to see some of these deals. And now you get a chance to open up a massive market. And we're talking about $250 trillion in total assets. So even if just 0.5% decide to go this route, and we're seeing it. There's a first NASDAQ-listed company that just tokenized, it's a biotech company, just tokenized their cancer drug, their signature drug in their pipeline. You're seeing the Andy Warhol painting. You're seeing more and more exchanges come out. So it's happening right now. And if you're looking at just 0.5% of these assets getting tokenized, you're talking about $1 trillion market. And I guarantee you something. Nobody's talking about it here. By next year, you're going to see 5% of the companies all around here talking about tokenization, looking to tokenize their best assets.
Great. And one more question, because I'm just curious. What do you see for regulatory laws for this kind of process? And how do you think it might affect that process?
And that's a big risk. So the SEC is coming out and regulating this industry. They deemed every token a security. So that means the current 2,000 tokens, or utility tokens, are going to have to somehow go into reformat their tokens, or they have to report. Their only obligation was to give you a token, and you're only getting access to their products and services. So if Microsoft comes in and buys these companies for $50 billion and it trades at a $2 million valuation, you get nothing. You're not an equity holder. So they're making everything securities, and it's going to be a new line like Crypto 2.0 that's coming out. And the SEC is regulating this industry. They're looking to come out with regulation for the exchanges. This way you know your money's safe, right? You're going to have, know your customer, KYC, AML compliance. If you get into the offerings, you have to be an accredited investor. But now you don't have to worry about foreign exchanges. You don't know who these people are. So when you invest, you want to know where your money is safe. You want to know where it is. You want to be able to take it out very easily. And that's what's coming over the next 6 to 9 months. And that's why I think 2019 is going to be the year that we're going to see this really, really take off.
Great. Well, thank you so much for joining us today. And we'll see you next show.
You got it.
Thanks.